Hi traders, welcome back. Today I'd like to talk to you guys about consolidation and several different indicators that can help you determine when price is consolidating. Now of course, I'm sure you've all heard that indicators, they're all lagging, right? And that's definitely true because all indicators are just mathematical formulas based on historical price information. So they're always lagging. But, there's still a few good indicators out there that can still, help you determine when price has been in consolidation for a period of time. Of course, you never know that you're in consolidation until it's actually happened, right? So even when you're visually watching the chart, you can't predict the future. So you can't predict, when price is going to consolidate. Right, it has to happen for a while before you go, yeah, price is consolidating. So just keep that in mind. And also, to help with this, you can see I'm using the 5 range bar type. Another good bar type is the Renko bar type. So both of these help eliminate consolidation. And the way they do that is, right now I have mine set to a 5 range. So it takes 5 ticks it takes 6 ticks before a new bar is generated. So if we take this bar for example, price can bounce up and down within 5 ticks within the range of this bar, and a new bar will not be generated until price jumps out to 6 ticks of range, and then it'll start a new bar. So if I change this to a 10 range, you could determine that even less consolidation would be shown on the chart, because all of these bars here that are consolidating, they do appear to be within like a 10 tick range. So a lot of these bars would disappear and you need to just get 1 or 2 10 range bars. So the bar type can help you eliminate that's definitely the first step to help you eliminate consolidation on your chart. And then secondly, we'll try and handle that with some various indicators. So I've got some charts prepared, and we'll just kind of step through these charts, and we can take a look and see their behavior. And from there, hopefully you guys can play around with this and kind of find out what works good for your style of trading. So we're going to start off with something simple, and then the last chart is kind of the one that I find most useful, most valuable. What I have on here is an EMA, just a 21 period. Once again, you kind of need to adjust the period of your indicators to kind of fit the instrument. Each instrument has a different amount of volatility, so that kind of helps. We got the EMA 21 on here, and over here I have this great indicator which can be found on Big Mike's. It's called the anti-regression channel. And you can see that it's adjusting itself when I move the chart backwards. So you can see it historically. So it's a great indicator. And it's on Big Mike's. The name of the indicator does not have the word ANA in it. So don't search for ANA, just search for a regression channel. And this is kind of the latest version that will change colors. So you can see it's blue right now for sloping up, and then when it slopes down, it switches to red. So great little indicator here. You can see it sloping up and down. And so this NinjaTrader indicator down here, linear regression slope, is just telling you what the slope is of the regression channel. So right now you can see it's sloping down. So if the linear regression slope is below 0, that means it's in a negative slope. So right now, let's kind of pop it here. So it's in a positive right? So it's still in a positive slope. And it's now that it's crossed 0, we can see that the channel is sloping down now. It's turned red. And as it steepens, you can see the slope indicator is continuing to dive down further and further, indicating a steeper slope on this. And as we keep stepping forward, you'll see now the slope is pulling up, but it's still pointing. You can see this channel is still pointing down, but it's not sloping down as much as it was previously. So if I step back, you can see how steep that was. You can see the indicator still way down here. If I step forward, you can see the slope is not quite as dramatic as it was, and therefore the line is starting to pull up. And it'll still keep pulling up, and now you can see it's flat, or nearly flat. You can see the slope indicator here is nearly at 0. So you look at all those zeros, they're nearly at 0, so essentially we're kind of flat. And if I step forward one more, now it's in the positive territory, and now the channel is sloping up. So I've got the slope on here because we kind of want to look for when the channel is kind of in this flat condition. So I've marked 2 thresholds here. It's kind of created some ranges that to me kind of indicate, that the channel is, basically flat, which you can see here. We're kind of in this little ranging area, and if we step back, we can see our slope is within the range of my 2 lines here, and we're kind of in this flat area here. So if you just watch the channel, you'll see it's flat. So these are the 2 indicators we're going to look at right now. So what I have set up right now is you can see the painted background on the chart. And so the painted background is looking at the EMA 21. And once again, I've also set kind of a range. So you can see that the painted background is matching when the EMA has flattened out. There's still a little bit of slope, but it's fairly flat. So they're using an SMA or an EMA, very simple way to kind of know when you're in a ranging area. However, it did kind of fail us in this area here, and that's due to we had quite a good pullback here, quite a good downtrend, which is still affecting our EMA, right? So moving averages, kind of fall into this lagging situation where, the EMA 21 is still sloping down because of all these previous bars that had a good downtrend. And finally, towards the end of this consolidation area, we get 1 bar here. It's flattened out. So take it for what it's worth. It did seem to work over here, a little bit of range. Really our consolidation happened here. So it took a little while for the EMA to catch up and flatten out. So the EMA is going to work okay as long as you don't get too dramatic of a move. So we can see here, definitely took the EMA a while, kind of flatten out. So the EMA or an SMA, they're so-so. But a lot of traders do like to use, their moving averages. All right, next we'll take a look at the linear regression. I'm using a 10 period. So this looks a little better. It's very similar. We can see in this area we caught some more range bound area was caught. It marked this area here pretty good. Again, it is a little lagging. So it marked this, these guys on the way up to this uptrend. It wasn't fast enough to catch, these bars kind of in a range bound. You're gonna find that's kind of normal for most indicators. You're gonna need at least several bars to go by before your indicator can say, or even a person could say that, yeah, we're in this range bound consolidating kind of situation. So I don't consider this a bad situation. Once again, up here we had this nice uptrend, and we're just starting to consolidate in here, and so it caught a lot of this, which is pretty good. And then as price kind of moved back up into this area, it caught this area again. So let's kind of take a look at the channel there. It's kind of in a flat situation. Then we get this little downtrend here. We get enough bars moving down where it just pulled the channel down too much, and so it doesn't think we're in this range anymore until price pops back up. Now let's take a look at both the EMA and the linear regression combined. What I've done is combine the two, and now you can see it's marking more area. So you can see when you combine the two, it's giving us a better result. Definitely marked all of this in here really well. No indicator is going to be perfect. As we can see, when we're really just kind of getting chopped up here, we're getting mixed results. But with those mixed results, you can see it opens the door when it gets in this nice uptrend. And then this pullback, it opens the door. There's no consolidation marked here, just a few. And then this new uptrend, that's once again due to the lagging situation. It's marking this area until price continues on. So, all right, so that's it for those guys. Let's move on to the next one here. This is a really interesting indicator. So this is the BB MACD, or the Bollinger Band MACD combination. So the big blue and red dots is the MACD line, and where the author of this also added Bollinger Bands to it. So the way this kind of helps you find consolidation is when the MACD is within the Bollinger Bands, it gives you a good idea that you're kind of in a consolidation area. So you can see that's what's being marked here whenever the MACD line or the dots are inside the two Bollinger Band lines. And so we can see here a little bit of consolidation, a little bit of consolidation, consolidation again. Once again, I guess this is just a tough situation. This consolidation is always being detected right afterwards. A little consolidation here. Interesting that it really missed all of this consolidation. Looks like just barely missed it. So obviously I could adjust the period of this to include this, but that may introduce more lag or more whipsaw. If I shorten the period of the MACD, it'll introduce some more whipsawing in when it's detecting consolidation. Let's kind of move forward and take a look at some other areas. It didn't indicate this area as well, but it did pick up on it. It picked up when price pulled back here. Once again, looks like we got a new downtrend starting, and it picked up when we got this pullback into a little bit of consolidation. This is definitely quite a bit of consolidation, but it missed the beginning part, which I'd say is normal. But all this back in here, you picked up most of it. Looks like it picked up about 75% of it. Okay, now let me scroll back and we'll look at some other ways that I've looked at this. On this one, I'm just looking at the MACD line to be flat. You can see, remember this area here was missed. Let me show you that again. See, this area was missed. And so what I noticed is that the MACD really flattened out here. You can see how flat that is. So I decided, let's take a look and mark all the areas where the MACD flattens out. So it did pick up on this really well now. Picked up on this area really well. And you can see it's marking, just kind of spot marking little areas here. So this, marking this, and this isn't bad. The price is consolidating a little bit. It'd be kind of nice if it was continuous. Kind of picked up on this as price kind of slowed down. It's still in an uptrend here, but it's slowing down. Remember, this is a MACD, so it's calculating momentum. So the momentum is slowing down a little bit, and thus the MACD line is kind of flattening out here. All right, next, what I've done is I've combined the two. I've combined the MACD being flat and looking for inside situations. Actually, let me go back to the flat area. And we can see, so we're in an inside situation here, but it's not flat. So now if we combine the two, now it's kind of marking this area. So what this indicator is saying is that to us it looks like a little uptrend, but when you look at the bigger picture, it's more of a pullback. And pullbacks are generally indications of potential consolidation coming. Right, and this is just definitely looks like a lot of consolidation happening. Little downtrend in between, and then just some more consolidation. And I'm going to move forward because somewhere on the chart here I have marked a special situation. Okay, so here I found the area I'm looking for. And what I've noticed when I was setting up these charts here, let me kind of let me expand this out. What I noticed is that in some situations, I could pick up an extra bar of a trend if I looked at how steep the slope was of the MACD. So you can see the MACD here is in between the two bands, here and here, but look how steep that slope is. It's really steep. So I figured, let me take a look and see what happens if remove, a steep slope, or if I allow a steep slope within the bands to not be marked or not be considered as consolidation. I'll take a look, and so I call this one a little more complex. And so what it did is it got me an extra bar of this trend. Let me put it back there. Right, you can see it's marking this bar. It's marking a couple of these bars over here. And so looking at the slope of the MACD is removing the consolidation marker a little sooner. So it's giving you an indication that you're in a trend a little sooner. All right, that's what I have for the Bollinger Band MACD. Let's go to the next indicator. So next up, I have the Fisher's transform. And to summarize from Wikipedia, the Fisher's transform was used to generate a compensating value for when a population deviates from its normal range. So to kind of give you an example, you can see the Fisher's transform. The value here is 0 on this bar, and as price kind of skyrockets from this normalized value here, you can see the output of the formula takes off with it, and it's generating a compensating value. So what this can be used for is when the output value is between a certain range, you know that you're within a normal range of the population. So what I've done here is you can see the two white lines. I've kind of just eyeballed a threshold value or a range, and you can see them marked on the chart. So when price is kind of consolidating or range bound here, you can see it's marking those areas. And so then as price takes off, you can see this indicator takes off, and then price begins to has a little pullback. So does the indicator, has a little pullback, and then after a couple of bars, it enters this threshold range where price action has kind of normalized, kind of settled down. So this is kind of a basic, simple use for this indicator. And we can see here that as price is kind of slowly making its way down, a little range bound, we can see the Fisher's transform doesn't really take off, but it does stay outside of this threshold area and just kind of, is range bound itself until we get down here. And that allows the formula to normalize back to 0 again until price takes off again. The Fisher's transform takes off as well. And then we can see once again as price begins to pull back, so does the indicator. You probably kind of picked up on that when you see the indicator pulling back towards 0, right? That price is making a pullback as well. So price is beginning, to consolidate here. So I've also created a way to kind of analyze this pullback. So let's take a look at that now. So now you see we have combined the pullback of the indicator is being marked, and when we're within this threshold value. You can see it kind of marks these consolidations a little bit better. All right, price takes off. We get a little pullback. We get a pullback enough to where now it kind of looks like we're in a downtrend, but then price is consolidating around here again. Another little downtrend, so and so forth. You're probably wondering, why did I use a line chart? Well, just to kind of help focus on that this indicator originally came from a statistical formula, right, which is only analyzing basically a line graph type of data. All right, next, let's move on to the final chart that I have here. And this is probably my favorite one here. So the indicator on top here is the ADX VMA. This indicator is available on Big Mics. I'm not sure if it was authored by someone on Big Mics or maybe it might have been pulled out of a statistical book, but you can tell it has the ADX formula involved in it and a particular type of moving average. Maybe it's a volume weighted moving average. I'm not exactly clear on the details. But someone took this indicator and they really kind of broke it out into nice 3 different plots here, right? So you got blue for an uptrend, and these yellow dots for consolidation, and red for the downtrend. And then I also have down here the ADX, 2 of them, and the ADXR, which the ADXR is tracking the momentum of the ADX. You'll also see on these ADX that I have a white line. So this white, really thin white line is a 2-period SMA of the ADX, just to kind of smooth it out, because you can see it's a little choppy here. I smoothed it out to give us a better reading on what the ADX is doing here, so we're not getting a lot of chop in the indicator. First, what I have on the chart is I'm just looking just plainly at the ADX VMA, and I'm just going to call this the VMA for short. So you can see that when we have the yellow dots here, that's what's being painted on the background of the chart. So next, let's take a look at the ADX. So I've combined the VMA and the ADX 6 and 10 period. So this upper chart is the 6 and this lower one is the 10 period. So it looks very similar if you look at the chart, but now you can see that there's kind of an analog, there's more feedback from Bloodhound. So we get in this analog type of feedback. So when you see the shorter bars here, what that's telling us is that 2 out of the 3 indicators is in alignment with consolidation. So we can see it's not the VMA, that's in a red downtrend, but most likely it is this ADX here because it's in a downtrend. All right, so let me kind of give a quick synopsis of the ADX. So when the ADX is sloping up, that's saying that you're in a trend. So you can see the ADX is sloping up even though we're in a downtrend. So the ADX doesn't tell you the direction of the trend, it just tells you that you're in a trend. So we can see the ADX had a little pullback here, so it's not in agreement with the VMA, and this longer period ADX is probably just beginning to slope up. It's kind of hard to see. So we can see here that as price is kind of ending its downtrend and it just starts to act like it's going to consolidate, we can see that we get a little bit of a warning here. And then we're definitely in a consolidation here. And as price begins to break out, it's just warning us, this could be a little fake breakout. And we're going to pull back saying we're in a range. It looks like we're breaking out again. We're getting this warning bars, and then boom, price just takes off. Then a little bit of consolidation here. So you can see the feedback is, just a little warning from the feedback here until price takes off and we're in the clear. And then we're range bound again. We're getting clear indications that we're range bound. Not all the indicators in alignment, but you can see most of them are. Let's take a look a little further down the chart. Get a little downtrend, then some consolidation, another good downtrend. All right, and then a pullback and some consolidation, and a little uptrend, consolidation again. Once again, this just kind of illustrates that no indicator is perfect. So we can see that we're definitely consolidating, but not all of the indicators are in agreement. And apparently this consolidation is, messing with the shorter period ADX here, which is beginning to trend upwards. All right, so we can see that as we get this little downtrend, the ADX began to move up. It even looks like the 10-period ADX was beginning to slope up ever so slightly. And then again, range bound, nice downtrend in the clear. Once again, we get a little bit of a warning here. This price has this little pullback. And then another warning here. This definitely looks like consolidation. All right, another pullback, marking the consolidation, a little downtrend. All right, so this looks pretty nice. I kind of like this feedback here. Kind of gives you a little warning, heads up. Maybe tighten your stops. Maybe get out of your trade a little soon, just in case. And we can see here, of course, it's not perfect. We got some consolidation in here, but unfortunately it didn't get marked this time. 6-period ADX, still felt like we were in a trend, even though we can look back and say, yeah, this is kind of consolidating. And then this uptrend here, we got a little bit of consolidation. It gave us a warning. That was a pretty good move up there, and it gave us a warning. But of course, this goes to show you never know when the trend is over. This is a pretty good extended trend here, almost 1 penny. You can see we're down here around 33.80. We get all the way up here to 34.60. 80 cents. That's a pretty good trend move in such a short period. I'd say it's kind of fair for the indicator to kind of give us a warning here in this little consolidation, because that was quite a good move. Last little spurt up, and then there's been so much uptrend movement that even though it's still trending up, the indicators, it must be using somewhat of some momentum. And so as the momentum of the instrument slows down, the formula is considering this slight up move as consolidation. So I'd say that's giving us a fair warning that we got to be pretty close to the trend. And, probably statistically, it's probably correct. So this is definitely one time where the trend breaks all the statistics here. And then, you can see it's finally over. This indicator is definitely telling us, hey, we're going to get pullback and consolidation mode. And then even though there's not much down move, apparently there was just so much up move, the indicator got tricked into marking this as a considerable trend down. So definitely the shorter period ADX considered that a trend down, although the 10-period really didn't. It was pretty flattened out there. All right, and next what I've done is I've added the ADXR. And so you can see I have this white line. So I kind of found a threshold value that whenever the indicator is above this threshold value, that it's kind of giving you a warning that, the end of the trend is really overextended whenever it gets past this threshold value, at least for the 6E, this instrument. Let's take a look at that. And now you can see this system is really conservative now. You can see, it's marked this whole area as consolidation. And then we get a pretty good down movement there. It's a little slow to react to this consolidation, but you can see we get a couple of warning bars as we get this little pop-up. So this whole move is in the clear. Definitely have some warning in here. Being conservative as it is, you can see it's a little late to the party on this last bar of the down move. Then it gives us the all clear, but the market decided to just kind of consolidate there. A little bit of the up move left. This is definitely a lot of consolidation going on in here. Nice little pop up. Nice little pop up. A lot of consolidation. Unfortunately, these days that I'm showing you, there's a lot of consolidation going on here. You know, nice little move up again. And all this, just not much price action. Just again, there's no perfect indicator out there. So even though we got this nice uptrend, but once again, this uptrend was still within this kind of consolidation range here. Let's keep moving on. Look at some more examples. So we got a nice little downtrend. We got a little warning here. You know, probably because this downtrend is very subtle. Nice little downtrend. This is kind of nice example of this warning. This warning here worked out really well. You know, you still could have inked out a few more ticks out of this, but this is definitely looks like a fair place to kind of get out, or at least tighten your stops and tighten your profit target. Now, unfortunately, market's just not really giving me some great examples. So, all right. Well, with that, traders, I thank you for your time, and I'll see you next time. Bye-bye.